So, Tractor Supply, the go-to spot for everything from chicken feed to cowboy boots. Well, they just dropped their latest earnings report, and let's just say Wall Street was not thrilled. We're going to unpack what went wrong and, more importantly, what they're planning to do about it.
And when I say not thrilled, I mean the reaction was, well, it was swift, and it was brutal. The stock took a nosedive, plunging over 7.5% in just one day. Now, a drop like that is a huge deal. It's a massive red flag telling you that investors got seriously spooked by something in that report.
So, the big question is, what on earth was in that report to cause such a panic? And, looking forward, what's Tractor Supply's game plan to win back that confidence? That's exactly what we're going to get into. Okay, so first things first. Let's look at the big, flashy numbers, the ones that really set the tone right from the get-go.
Yeah, this table really tells the whole story, doesn't it? It's pretty simple, but wow, it's powerful. You've got the two metrics Wall Street obsesses over, earnings per share, or EPS, and revenue. And look at that result column, miss and miss. They were expected to hit 46 cents a share, but only managed 43. And revenue? They were supposed to clear $4 billion, but they fell short. A double miss like this? That is a huge red flag for investors.
To his credit, the CEO, Hal Lawton, didn't really sugarcoat it. He was pretty direct. He basically said, look, we're seeing a real shift in how people are spending their money. Folks are still coming in for the essentials, the must-haves, but when it comes to the bigger, nice-to-have stuff, yeah, they're hitting the brakes. Hard.
Okay, so that's the what. Now let's dig into the why. What were the specific reasons the company gave for this slowdown? All right, so management basically pointed to three main things. First up, believe it or not, a quiet storm season. Second, and this is a big one, customers just weren't shelling out for the big-ticket items. And third, the holiday season was super competitive with discounts everywhere. Let's break each of those down. So that first point, it sounds a little weird, right? Storm recovery headwind? It's a bit of Wall Street speak, so let me translate. The year before, in 2024, there were some major hurricanes. That meant a huge spike in people buying generators, chainsaws, all that recovery stuff. But this past year, pretty quiet on the storm front. The company called this a 100 basis point headwind. Now, basis points are just a fancy way of talking about hundredths of a percent. So 100 basis points is 1 full percentage point. That quiet weather literally shaved an entire percent off their sales growth. Crazy, huh?
The second reason is probably something we can all relate to. People are just being more careful with their money right now. They're thinking twice, maybe 3 times, before dropping a few grand on a new riding mower or a big generator. And what's really interesting is that Tractor Supply doesn't think they lost that money to, say, Home Depot. They think customers took that cash and spent it on vacations, concerts, experiences instead of stuff.
But okay, a tough quarter isn't the whole story here. Not by a long shot, because if you dig just a little bit beneath those headline numbers, you start to see some really encouraging signs. The foundation of the business is actually pretty darn strong.
I mean, check this out. Forget the one-quarter dip for a second. Their actual customer count, it grew by 2%. Their loyalty program, the Neighbors Club, it's a monster. It accounts for more than 80% of their sales. That's insane loyalty. Plus, their digital business is growing, and they opened nearly 100 new stores last year. These are not signs of a company in trouble. These are signs of a healthy, growing business.
And here's the really crucial part. The everyday stuff, what the company calls CUE, or consumable, usable, and edible, that stuff is still flying off the shelves. We're talking animal feed, farm supplies, pet food. This is their bread and butter, and it proves just how resilient their business is. Why? Because no matter what the economy is doing, chicken's still got to eat.
All right, so that's the diagnosis of what went wrong. So what's the prescription? What's the plan to get things back on track for 2026?
Well, they put out their financial outlook for the year, and it's pretty clear. They're aiming for 4 to 6% sales growth overall. Now, that's going to come from a little bit of growth, 1 to 3%, at their existing stores, plus the impact of opening around 100 new ones. So they're not promising the moon here, but they are mapping out a solid, steady return to growth.
But how are they going to get to those numbers? They're not just sitting back and hoping the economy gets better. Nope. They are actively rolling out 3 big strategic plays to really drive sales.
And here they are, the 3 pillars of their plan. First, they're going big on direct sales by doubling the number of specialists who work with their large farm and ranch customers. Think big orders, big relationships.
Second, they're tackling the delivery problem for all those big, bulky items by expanding what's called final mile delivery to cover more than half their stores. And third, they're leaning into their online pet pharmacy, all of it. This thing is already doing about $100 million in sales, and they plan to integrate it even more tightly into their main business.
So let's bring it all together. As we wrap this up, what's the big picture here? What's the one key question we should be asking about Tractor Supply going forward?
It really boils down to this. Tractor Supply is making a big bet. They're betting that the strength of their essential needs-based products, the stuff people have to buy, combined with these new investments in services, will be enough to ride out this wave of consumer caution. But the real question, the multi-billion-dollar question is, will it be enough to get people to start spending on the big stuff again? That's the story we'll all be watching in 2026.